Hey traders, this is Ron Haight. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Qs. The NASDAQ 100 ETF finished up a whopping 21 cents. If I zoom in here closer, what's happening right now is we're back testing some moving averages and even the old trend line. Once we got above the orange line, which again, 50-day SMA, institutional moving average, stayed above it for about 3 days, 4 days. Now we're coming back down, back testing, bouncing, back testing, bouncing. Also the trend line, also the 20-day EMA. So intraday today, we were pretty much on the 20-day EMA. Remember, if we get below that red line and that 20-day fails right there, that's when we look to these previous little swing points, with the major target being back down at 145 on the QQQ. Taking a look at the SPY, finished up a whopping 55 cents. Look at, if I zoom in really close here, back test, just like the Qs. This is bullish action. You know, you get above it, back test, back test. If we close over these highs, that re-energizes the bullish trend, sort of adds more weight to the bullish argument. However, if we fall below the red line, like I said, here and here would be supports. Then let's go look at the IBM, which is the Russell 2000. It was down about 0.40 today, 40 whopping cents. And it too, basically back testing 50-day, back testing 50-day. Very interesting indeed. So far, overall, I still give the bulls the edge on these daily charts for now. Now, IBM, they had earnings last night. Stock gapped up this morning, finished higher by over 10 bucks, 8.46%, massive volume, huge volume. Notice we got stalled at the 200-day SMA in purple. Funny how that happens, which also coincides with the gap down point. Funny how that happens. It is random, but at the same time, is it really? You know, those previous points are just like magnets. Well, at this point, if and when IBM can close above its 200-day, which was basically at the highs of the day today, around 135, then the gap fill up to 143, about $8 more would be the target. Taking a look at Tesla, I had a question on this one, and I got to tell you, I had drawn in these previous resistance levels. I'm going to go back 2 years on Tesla just to drive this point home. Some folks ask, well, why don't you trade certain ones or whatever? It's like at that point, oops, come on now. There we go. Up there, it's been paying to sell, right? Maybe doing like a bear call or consider a long put or something. But then when you get down here, it seems to be a buying opportunity ballpark. Everything in between is just a massive 125 or so point trading range. So when I talked about Tesla a little while ago, even back in December, we got up there. Well, no shock, we came back down. We tried to rally, but you're still in the middle. I'd rather be up here considering counter trend being bearish and then down here being counter trend being bullish, only because history has shown that would have worked. Now, at some point, it's not going to work. It's just the way it works, lack of a better word. But you're in the middle. It's 50-50. It's sort of enter at your own risk. There's no benefit right now to being, I think, bullish or bearish with a great reward to risk ratio. You're in the middle. We can go either way. And we've seen other times where it just zigzags and it can whipsaw you. Right now, the trend is down. There was negative news from Porsche ramping up its electric car business. I think there was a negative report out today that I saw in Zero Hedge talking about someone talking negative on the stock, etc. Right now, we're getting closer to the bottom. We get a turn. I could have a fixed stop in there. But just because I have a stop doesn't mean it gets hit. The stock could gap below it. And then whatever I thought my stop was going to be is now worthless. It's been blown through. So remember, stops only work if the price actually gets filled. If there's a gap overnight, the stops aren't really good for much. In terms of price, I should say, qualify that. And having stops, I think, is incredibly important. You know where your line in the sand is, right? But actually getting the stop filled, that's a whole nother story. Here's Capital One. The stock was beaten up today, 6+%. And if I zoom in here, the lows of the target, huge volume today, closing or lows of the day. I would say another 10% or so before you find support back at those, frankly, Christmas Eve lows. Here is BJ's, which is the stock we talked about. And yesterday, here's 2-year daily, let's zoom in. That is bearish engulfing. So we opened up here and then we closed down here. That's bearish engulfing, right? but we're still above the blue line, short-term moving average, which is the 5-day EMA. Volume was pathetic. If we see bearish engulfing, we'd like to see something like this, where there was a lot of exuberance opening on the market, and then it closed the lows of the day with a spike in volume. So from a candlestick terminology standpoint, which I love candlesticks, yes, it's bearish engulfing. However, it's above its 5-day and there was no volume. The volume was incredibly low. So no, that does not qualify as a true reversal target or reversal signal. And then how about pizza stocks? I talked to you guys about Domino's Pizza and its amazing seasonality this time of year. Past couple days, it's really starting to rip. Today, the stock finished up another nearly $10. Current target, previous swing high, right? Target 280, and then back up near these previous all-time highs. And then, so Domino's is the seasonal darling right now, but Papa John's, which typically is not, did have a good day today, but not because there had better reported numbers or something. It's on rumor. The stock was up 7.66%, a whopping $3 whole on the rumor there might be a sale going on, or it's all reportedly and it's speculative. I'm not saying that's the truth at all. You can do your own homework, but I did catch that headline. I'm like, catch the headline on the stock. I was thinking, wow, this thing might have jumped 10, 15 bucks. Nope, it was up 3 whole big ones, and the volume was only 2.4 million shares. I'm not really, putting a lot of faith in this, but if I was bearish on Papa John's right now and I had any bearish trade ideas open or strategies, anytime a news headline of buyout or something, acquisition is up, I run for the hills because it could turn out to be true. The stock could skyrocket. And from a bullish perspective, you're given a gift essentially at this point. So that's how I feel about takeovers. Be very wary of them. And if you have trades open, they can easily backfire. First sign of news, I'm out if I would be trading them. It's just not worth it. And that's it. Wish you guys a fantastic rest of the week. And I'll see you guys in the next video. Take good care.